There's a lot of hype right now about private lending, and it can work, but let's just stop pretending that it's some magic fix, because a lot of people hear private mortgage and they think flexible, fast, easy approval, and it's true, sometimes it is, but private money is usually meant to be short term, often 1 year, maybe 2. It's supposed to buy time, not become a long-term plan. It generally is there to get you over the finish line or to finish the renovations and then get out, right? So a lot of people don't think hard enough about what happens when it's time to get out and what that renewal looks like. Because if you don't qualify with a bank today, what exactly is going to change in 12 months? Are you earning more? Are you paying off debt? Are you improving your credit? Are you selling another asset? Maybe you're lowering your loan amount. Those would all be good things. If the answer is hopefully something though, then that's not an exit strategy. You're going to be stuck and you're going to likely lose. I'm not saying private money doesn't have a worthy role if you have a plan. I'm just saying that most people miss the plan portion of this. Private lending is expensive. The rate is usually higher, but that's only part of it. There's also lender fees, broker fees, legal fees. And in many cases, you're only paying interest. You're not actually reducing the principal. And for some people, that's okay. That's exactly what they need to get back on their feet for that short time. So just know. The borrower may feel relief today, but in a year, if you're standing in the exact same spot with more money spent and not much progress made, how does that feel? From the lender side, it's not risk-free money either. Yes, the return can look attractive, but if the borrower cannot make the payments, now you're dealing with missed payments, enforcement risk, legal costs, delays, potentially a property that's not easy to sell or recover against. So private lending can work, but only if the file is underwritten properly with a real exit plan. So the question is not just, can this private mortgage be approved? The real question is, how does it end? If you are the borrower and you can't qualify out later, or you can't carry the payments until you can do that, the private mortgage is not going to solve a problem. It's going to delay it, and it's going to make it much more expensive. In the end, private lending can be a very useful tool, like I said, but it should be a strategy. It's not a gamble. And if you're considering it, make sure you understand that both the opportunity and the risk can be significant before you sign anything. So reach out to me if you want to discuss this further, because I have been part of privates, and I always share what I know so that you can make better decisions and help yourself against any type of tragedy.